Again about your Bitcoin $1 million call, especially as we see Bitcoin wavering again, dipping below 40,000. Time horizon matters, as we've been talking about. When are are things going to get to $1 million? How long do
So that is
have to wait?
a 20. We've started moving out of most of the social platforms because there's a lot of competition out there, number one. I think Meta platforms, so Facebook, the sharp deceleration in its revenue growth to somewhere we think or their guidance was 3 to 11% for the first quarter. That was shocking and really brought to light TikTok is taking a lot of oxygen out of the room. And Twitter also, I would say the management change was another reason for us. Whenever we see big management changes, typically we're going to expect, this new executive, even though he was the CTO, kind of putting his own mark on the platform. And so that causes some uncertainty. And I feel like Jack's leadership was very important to evolving Twitter to where it was. And his idea of even opening up to sort of crowdsource the oversight of the behavior on the platform, we thought that was moving in the right direction. And Parag's first few things we saw after his arrival was more censorship. So, one thing after another. We have a 5-year investment time horizon. So if you look at the last 5 years, including the first quarter waterfall performance, the last 5 years we have handily outperformed the NASDAQ, the S&P. So 5-year time horizon is not just looking back, but looking forward as well. And putting this recent performance into perspective, you'll note that during COVID, so from April, whenever the market bottomed, through February of 21, our flagship strategy was up almost 360%. No, I'm sorry. Yeah, 360%. Down 60% from that at our worst. Very tough. And, I'm thinking about our clients, and I've been extremely gratified, we all have, that for the most part they've stuck with us. Last year, our net inflows were $17 billion. Most of that weighted at the beginning of the year. And so they have felt the full force of this decline. And I think a few things are at work. Number one, our long-term time horizon is practically the first thing we say when we're talking to prospective investors. Number two, if I were to have told you in February, or talked to you in February of 21, even at that point in time, given our projections for the next 5 years, we expected our flagship strategy to deliver a 15% compound annual rate of return, so about double the market over time. Today, after this decline, our projections have, if anything, they've increased because artificial intelligence and breakthroughs are moving so much faster than we expected. So our expectations for future returns have gone up as the prices have come down. So today, we expect, now consider the source. This is our research and these are our expectations. And we could be wrong. But whereas it was 15% last February, that number today is 50%. Entered the sweet spot of exponential growth trajectories. Most of the market thinks in linear terms. Most of our careers, we've experienced primarily linear growth, growth that slows down, decays to the nominal GDP growth rate over time. We have a few experiences with exponential growth. Amazon is a very big one. When we were buying Amazon in 2003, what we were saying to investors is, if you believed Amazon could grow anywhere in the 20 to 30% range for the next 20 years, would you buy it? You put that into a dividend discount model, you would buy that all day long. But that's not how people were thinking about it. Between now and 2030, the market cap associated with truly disruptive innovation is going to move from $10 trillion today, which is less than 10% of the market, to 210 trillion. This is just in 8 years. So that's a 30 to 35% compound annual rate of return. And that kind of disruption to the traditional world order is going to mean subpar returns for the indexes, if we're right.
Right.
Spend all of our time focused on disruptive innovation and making sure we're on the right horses. And we've spent the last year consolidating our flagship strategy from 58 names to 35 names. So these are our highest conviction names, and we've sold 22 stocks where we're saying, okay, maybe we don't have all the assumptions right. So we started during COVID, went through this, are these stay-at-home stocks or is this truly disruptive innovation? I think we're going to see a reacceleration of revenue growth. Now that we're moving away from the tougher comps, Zoom and Teladoc are two poster children for those, inviting a lot of questioning from that angle. And as far as the rate cycle, the interest rate cycle, if you look at history, and I actually had a value manager tell me this and wrote an email saying, I have looked into this, and it is not your ilk of stock that gets hurt during interest rate hiking cycles. It is mature growth companies that experience most of the pain. Well, of course, we've had a lot of pain for a lot of reasons.
Right.
But we also have more problems. Russia, Ukraine, food, energy prices. We can help that. Our strategies are all about solving problems. Electric vehicles are going to help us move away from energy, right? Bitcoin mining as part of utility ecosystems is going to accelerate the shift towards renewables. And the genomic revolution is going to help us grow food in areas maybe away from Ukraine, as it's in quite a bit of turmoil, in other areas that are not as friendly environmentally to food production. So Zoom's user base went from 20 million pre-COVID to 200 million during COVID. Now, a lot of those were not paying users. In fact, paying users went down from 15% of the total to 3%. Now
because everyone was using it.
Yes, now we're back. But think about what a great marketing opportunity, as unfortunate as it was, what a great marketing opportunity COVID was for Zoom. We all know it, we've all used it, and I don't know about you, but I am relieved when I'm going to a video call and it's a Zoom call, not a Teams, not a WebEx, not a BlueJeans, because I always have trouble with those other ones. Anyway, this is the first rip and replace cycle in the enterprise communication space in 30 years. Cisco ignited the first one as we were building out the backbone of the internet. That was all on-prem, very physical, hardware-oriented, right? Zoom is in the cloud as a rip and replace cycle and is going to cut the costs of enterprise communications. Enterprise communications is the largest part of the tech stack, $1.5 trillion revenue opportunity per year. And it doesn't stop with you and me on a Zoom video call and everyone else we know. We are moving into Zoom rooms, Zoom events. We're moving into Zoom getting more involved with work processes. So think of, have you heard of Airtable and Monday? So really helping to evolve work processes as we move into the cloud and become more efficient enterprises.
Again, about your Bitcoin $1 million call, especially as we see Bitcoin wavering again, dipping below 40,000. Time horizon matters, as we've been talking about. When are things going to get to $1 million? How long do
So that is a 2030.
Like the other calls that you talked about.
Right. You know, it's somewhere between 2026 and 2030 is where we think that $1 million from $40,000. I don't think people believed me when I said it on stage last week at Bitcoin 2022, but I meant it, and many people think, okay, so you're assuming that institutional investors become huge holders of Bitcoin. No, we're not. We're assuming, though, that they will move in gradually, and by the time we hit $1 million plus, they will have a 2.5% exposure to Bitcoin. Now, this is such a big idea, and that is such a small allocation.
Yeah.
I think they will regret not having more, because, as I mentioned, this is the first, each word I'm about to say is really important. The first global, big idea, private, meaning not overseen by any government, digital, rules-based monetary system. And of course, he means by that it's a great store of value because it's mathematically metered to stop at 21 million units, so that's a quantity rule. So great store of value, scarcity meaning, but not a great means of exchange, right? That would mean a flat price rule. But we think over time, even that will, thanks to the Lightning Network, become more of a means of exchange and a unit of account, playing all three roles of money. And just to top this off, when Art and I and Chris Berniski at the time, our analysts, were collaborating, I remember saying, Art, how big could this be? This is amazing. And he said, well, how big is the US monetary base? And back then it was $4.5 trillion, and Bitcoin was $6 billion in market cap. Today it's 800 billion. He said, well, $4.5 trillion. Today, that number is 9 trillion. So, it's a very big idea.